Good Friday morning, everyone, and welcome to NYSE TV Live. I'm Kristen Schuller here in studio at the New York Stock Exchange. Well, it's been quite the week on Wall Street. In fact, stocks shaping up for their second straight week of gains, and that comes after the S&P 500 ended at a record high on Thursday. Well, optimism in the wake of President Trump's inauguration on Monday and market fundamentals like earnings and economic growth, which typically power stocks higher, are supplying the recent boost. Now, more than 2 years into this bull market, deal flow is starting to widen as well. In fact, today, liquid natural gas company Venture Global, as you see behind me, is set to debut right here at the stock exchange. And it comes after another energy company, Flowco, IPO'd last week at the NYSE. Let's take a look at what's on tap in today's show. On the final day of the World Economic Forum, we will head to Davos, where the incoming co-CEO of consulting firm AlixPartners joined me to talk about its annual disruption survey. He'll share the findings from the C-suite. Plus, we'll learn more about the latest in blockchain technology with the Vice President of Strategy and Chief of Staff at Stellar Development Foundation. She joined my colleague Trinity Chavez from the Swiss Alps. And as heavy winds keep Los Angeles on fire alert, we will hear stories of hope from NYSE-listed communities about the relief efforts and support that they are providing during this time. Well, we are just shy of 30 minutes away from the market open, and so I do want to bring in my first guest to talk markets, what is driving the action, as we always do. So joining me now with more is Melissa Cohn. She's Regional Vice President at William Ravis Mortgage. Melissa, welcome.
Thank you.
It's great to have you on the show today, and the timing is right because it comes after we heard from President Trump yesterday joining the World Economic Forum virtually, calling for lower interest rates. What is the market impact from those words?
Well, I mean, so far the bond market has not really moved at all, and mortgage rates are tied to the 10-year Treasury, which is, moves based on economic data. So for mortgage rates to really go lower, you would think that, we would need to see weaker economic data and lower rates of inflation. But Mr. Trump's policies on tariffs, immigration, and tax cuts are all inflationary, which actually would send mortgage rates higher. So I know that Trump is going to put a lot of pressure on Mr. Powell to cut rates, but the Fed is an independent group and they cut rates based on economic data, and I don't think that they're in a position to cut rates at the moment.
I do think you bring up a good point. Investors obviously did respond in kind to remarks from the president yesterday, but the Fed, as you mentioned, is an independent body and does set the path for interest rates based on a dual mandate of inflation and jobs. And in fact, we're going to hear from the Fed next week at its latest policy decision, the first of 2025, including remarks during a press conference from the Fed chair, Jerome Powell. What do we need to hear from Powell next week?
I think that we're hoping, first of all, that he is not going to be hawkish because we've seen, that the employment sector has been stronger. Inflation has not continued to decline, and it's highly unlikely that the Fed will cut rates next week. But if Mr. Powell comes out and says that they are open-minded about future rate cuts and doesn't talk about the potential need perhaps to actually hike rates again, that, that will set a good tone in the market. I wonder if he's going to remark based on Mr. Trump's remarks yesterday at the WEF, and it'll be interesting to see how Mr. Powell is going to react to Trump and his, mandate for lower rates.
Of course, we had the inauguration on Monday, a wave of executive orders from President Trump after that, and markets set for a winning week. In fact, set to close at a record high. In terms of what that means going forward, what are the other data points on your radar?
I really look at inflation and jobs. So, the Fed's favored inflation index, which is the PCE, which comes out Friday after the Fed's decision next week, and waiting for the jobs report the following week. Now, if we see that job growth remains strong and that the rate of inflation is not continuing to moderate down to the Fed's target goal of 2%, we're not going to see rates coming down. if we do see weaker economic data, if we see that inflation is coming down and that there are fewer jobs that are created, well, then we can hope for lower rates.
So what does this mean for different sectors within the housing space? Obviously, you're focused on mortgage, but we do know companies trade here in the public markets, mortgage companies, also home builders. And that is something that we have been covering a lot as well. Within the housing space, how are the other subsectors impacted?
That's a tough question, but, it's interesting because the housing market in many parts of the country remains still, strong, that their inventory levels are below a normalized market. And, builders are building and people are buying, especially the new home builders, because they have the ability to give incentives in terms of the mortgage rates in order to get people to purchase their homes. So I think that there's general optimism. I can say that within my company and with other companies that 2025 is going to be a good year for the markets, for real estate and for mortgages, and for the economy, and that we have hopefully come to a point where we realize that the low rates during COVID are not here anymore, and that we're in a different rate environment, and that we need to accept where we are and just move on.
Okay, so let's talk about prices, what this means for home prices. What is your forecast on that front?
I'm a mortgage banker, not a real estate broker, but I would assume that real estate prices are going to continue to go up as inventory levels remain so low. It really seems that people are back in the marketplace and in purchasing, and understanding that they're just going to have to accept today's rate markets, and then they can always refinance if interest rates come down. And if rates do come down, then that will send prices even higher because it'll improve the affordability factor and more buyers will come into the marketplace.
Melissa, what are the other conversations that you're having with clients as we are getting closer toward the end of January?
It's really a question of doing the math. If you expect to buy a home and you need to move, you have to move today, and you have to accept that what it is that you can afford to buy today. And hopefully at some point rates will come down. You'll have the ability to refinance and be able to then, move up. In order to be able to take advantage of home value appreciation, you have to own a home. So people need to sort of get into the game now and understand that they can move from there.
When is the right time for someone to engage with a mortgage professional?
I think as soon as you are considering a new home purchase, you should reach out to a mortgage banker professional in order to understand what it is that you qualify for in today's marketplace. With higher interest rates, people who got pre-approved 2 years ago when rates were 2% lower are going to find that the amount of financing that they can afford today is a very different number. Also, to make sure that there are no issues with regards to their credit, what kind of liquidity do they need in order to make the purchase, and really try to help set guidelines for the potential buyer to figure out what it is they can afford, what it is they want to buy, and how to get them there.
Melissa Cohn, Regional Vice President at William Ravis Mortgage. Melissa, thank you for joining.
Thank you.
All right, well, stay with us because up next we'll learn more about findings from an annual survey of corporate leaders. They're experiencing more disruption, and we'll tell you how they are adapting on the other side of this break.
So Brightwave is an investment research platform that uses artificial intelligence to help asset managers understand more about the markets than is humanly possible.
And what would you say that makes you unique, though, from others who are currently on the market?
A number of things. So we have an incredible engineering team. So for myself, I established and led the language model engineering practice at Databricks. Created the first language model to demonstrate that open source technologies could exhibit the kinds of behaviors we've come to expect from ChatGPT. My co-founder is the former CTO of a federally regulated derivatives exchange and clearinghouse. It is.
Yeah, it's really amazing.
And his first deep learning patent was filed in 2018. We've got engineers from Meta and Instagram, award-winning research engineers, commercial team from UBS and McKinsey and Goldman Sachs. It's a stacked bench,
Yes.
and it has allowed us to execute on very, very difficult technical problems. If you think about the number of factors that are relevant to an investment decision. it exceeds the limits of a person's ability to keep it in mind simultaneously. And we see an opportunity with language models to create a technology that allows a person to connect the dots across millions of documents and see a story that nobody else has noticed in order to identify a mispriced asset.
And you decided to come to Money 2020 this year because you had a major announcement about your Series A funding.
That's right.
Yeah.
We have announced a $15 million Series A, preempted by Decibel Partners, one of our seed stage investors, and including participation from Omer's Ventures. We're extremely excited about this. This brings our total funding in the past 17 months to $21 million. We've quadrupled our revenue since our Series Seed announcement in June or July, forget exactly when. And it's happened quickly. We've seen vigorous traction, brisk demand from across financial services.
Good morning, everyone, and welcome back to NYSE TV Live. I'm Kristen Schuller here in studio at the Stock Exchange. Now, as the World Economic Forum comes to a close in Davos, Switzerland, one theme has been front and center. That's disruption. In fact, the incoming co-CEO of AlixPartners, David Garfield, sat down with me recently to share more about the firm's annual disruption index and takeaways on the ground. Let's take a listen.
AI is still a hot topic, but now I think people have really accepted that it's going to have a big impact on business. And there's a lot of discussion about the intersection of commercial AI and politics, how regulation is going to impact it, for example. There's, of course, a lot of discussion about the incoming or new U.S. administration and how that's going to impact trade around the world, and particularly between the U.S. and China. And then a lot of discussion about differences in approaches between countries, the U.S. vis-a-vis Europe.
I know AlixPartners just released its 2025 Disruption Index. What do you find as the most important or maybe even surprising takeaway from this year's index?
Yeah, so this year's study is really interesting. The results, I would say, are a little bit paradoxical. On the one hand, executives are saying that they're more disrupted than ever. And at the same time, they're less anxious about it. 67% of executives are saying that they are more disrupted over the last 12 months. But only 26% are saying that they're more anxious as a result. And the reason, when we dig into the data, is that organizations, companies really seem to be adapting. Their agility and their speed is up.
Certainly to be successful these days, agility, I think, is key across the organization, but I'm sure for leaders as well. And according to this report, I see supply chain disruption has increased. What's behind that, and how do you suggest that companies respond?
Yeah, that's exactly right. So more than half of the executives who responded say that they are anticipating greater supply chain disruption in the next 12 months. And there are a few reasons for that. One is they're anticipating the impact, the potential impact of tariffs. So over 80% are saying that, in fact, they may have to make adjustments to their business strategy as a result of changes in trade flows. But also over 75% of respondents are saying that they are going to have to make changes to the physical footprint of their business, their manufacturing locations, and their supply lines as a result of escalating trade tensions between the U.S. and China.
Well, companies are focusing more on resilience than efficiency in supply chains, it seems, according to this report. What does that shift actually look like in practice?
Right. So what we see is companies trying to become more resilient three different ways. One is financial resilience. That's obviously where the equity and bond markets play a key role. So having the right structure in your balance sheet and having the right access to capital. We see companies trying to build organizational resilience into their business. So that is making sure that the management team and the wider workforce can actually adapt to all of these changes and disruptions. And then very importantly, as it relates to supply chain, we see companies building operational resilience into their business. And that means being able to deal with disruptions in the availability of supply, lead times, and of course, the costs of inputs, raw materials.
How are you finding that companies are handling risks tied to geopolitical pressures like reliance on China?
So companies are trying to diversify their supply base and shore up their supply base where they can. Of course, some of those moves take time and take capital. And so a lot of it is trying to hedge or mitigate the risks that come from having concentrated supply bases.
So for businesses that need to build flexibility into their supply chain strategies to handle this constant change, what's the best way to do that?
Well, the first thing is to really understand your own baseline conditions. What do you source from where? Where are you single sourced versus dual sourced? And also understanding the contours of the supply market. Where can you resource from? Where is there capacity and volume to source from? And what are the rules and regulations associated with those markets? Once you have the contours, the landscape defined, then understanding the business case for making changes, either nearshoring, reshoring, friendshoring, or just changing the underlying source of your inputs.
So what advice would you give to businesses as they prepare for the rest of this year, the next nearly 12 months?
The big thing that we find, and in our survey, we try to isolate the real superstar companies, the ones that are growing faster and are more profitable. And we look at their responses and some of the things that they're doing. And one of the things that differentiates the real winners is making decisions and taking actions at pace, even amidst all of the uncertainty. So I think a big piece of advice I would offer is, despite all of the disruptions, you have to forge ahead. You have to make commitments to your customers, to your employees, to your suppliers, take action, and then be ready and able to adjust course as the conditions evolve.
All right, thanks again to the incoming co-CEO of Alex Partners, sharing more about its annual disruption index. Speaking of disruption, President of the New York Stock Exchange, Lynn Martin, was on the ground at the World Economic Forum this week. And before joining the global gathering in Davos, Lynn penned an article titled, "Disruption is Rarely Smooth." Her advice coincides with what the market research shows, that company leaders need to be nimble and resilient in the current environment. Well, amid the backdrop of disruption, Lynn sees three major trends that the business community should be tuned into this year. They include, one, the expectation that IPOs will return. And already we've seen a major deal get out of the gate by the name of Flowco, the energy equipment provider priced above its range and ended its first day of trade with a double-digit gain. Second, artificial intelligence will rely on good data. This message has been echoed throughout the World Economic Forum. The systems and agents are only as smart as the inputs. And third, economic uncertainty is palpable. This is perhaps most notable when it does come to the path forward for interest rates, which do depend in part on the stickiness of inflation. You can read Lynn's full remarks on social media. All right, well, stay with us because up next, our coverage from Davos continues. The chief of staff of a nonprofit focused on blockchain technology joined my colleague Trinity Chavez, and we'll share more on that after the break.
So, Colleen, you joined Planet Fitness as CEO in June. So tell me about your first 6 months.
It's been a very fast first 6 months. I really leaned into spending time in our clubs and getting to know our franchisees, talking with our club team members and seeing how our members utilize our clubs. I call it feet on the street. It's been really insightful. And we've also worked on our strategic imperatives and kind of codified our roadmap for our growth ambition.
So tell me about your growth strategy and vision for the future of Planet Fitness.
Our 4 strategic imperatives really start with refining our brand promise and then making sure we pull that through in our marketing messaging. We're also leaning into member experience to make sure that we're connecting with our membership and enhancing our relationship with our members and delivering a format both inside and outside the clubs that's most meaningful for them and is going to enable them to accomplish their fitness goals. And then we lean in on format optimization and our equipment mix. And that's making sure that we've got the right mix of equipment for how our members want to utilize our clubs today. And when we get all of that right, and we're thoughtful about unit economics and build cost for our franchisees, it enables us to turn up the afterburners on growth.
Now, how will you redefine your brand strategy and communicate it effectively?
we're growing stronger together, and we're all strong on this planet. We're seeing across generational cohorts a focus on utilization of strength in our members' workout routines and our prospective member workout routines. So as we've done consumer testing and consumer surveys, as well as how we've seen our members utilizing our clubs, we've recognized the opportunity to kind of shift our mix a bit and have a greater complement of strength in our clubs.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio at the Stock Exchange. The future of blockchain and cryptocurrency has been a hot topic at the World Economic Forum this week. My colleague Trinity Chavez sat down with the chief of staff of a nonprofit to talk this very topic. Let's take a look.
My biggest takeaway from this week is really that crypto is good for business, and there's a lot of optimism and momentum around sort of what can come next for the crypto and blockchain industry. And we've seen that both, on the institutional front, that institutions now, are looking to move on chain and do tokenized funds and see the benefits of that. One thing that I heard this week, is Jenny Johnson from Franklin Templeton was talking about how in asset management industry, costs have gone up in the last 10 years, up 80%, and revenues have come down 15%, and how they're thinking about blockchain to really help bridge that gap and find, efficiency, lower cost, an always on market operation. And when we think about it on Stellar, institutions can process 50,000 transactions for just $120, whereas traditionally they're paying $1 per transaction, and that costs $50,000. So, I think there's a lot of, what I've heard a lot this week is just enthusiasm and optimism about where the industry is going and how good it can be for business in different use cases. And excitement about a friendlier regulatory environment that's going to enable that.
And what are some of the latest announcements that we can expect within the crypto space?
I think what you can expect, is that more institutions like Franklin Templeton are going to get in the space now. I think, there's been some hesitance because they haven't really known what the regulatory environment might look like for them. And, you don't want to dive into something when you're a regulated financial institution without really understanding that environment. So I think now recognizing that that door is maybe going to open and there'll be more opportunities, I think we can expect a lot of financial institutions to start taking advantage of that. I also think we're going to hear a lot more because, Brian Armstrong from Coinbase was talking about this on stage. Danelle, our CEO, was talking about this on stage. Just really the impact we're going to see with stablecoins. Stablecoin market cap today, I just was looking it up this morning, is $220 billion. And I think there's also just a recognition from leaders and stakeholders across the world, actually, about how crypto and stablecoin powered payments have the potential to really empower the global majority. And there's a real world need for that tech. And I think we can expect a lot more folks figuring out how they're going to deploy stablecoins to enable a lot of those payment use cases that make it way more affordable to send money cross borders. And that's going to create efficiency by finalizing transactions faster. And that can be interoperable in that global way, that really enhances our financial system.
And as this new administration continues to make its way into the crypto space and has been crypto friendly, what are we seeing coming out from a regulatory perspective? What are you seeing there on the ground?
We don't have specifics yet. So that's why I'm mostly saying it's a lot of optimism about what's going to happen next. But I think the discussion is that, with the incoming administration, I think folks feel that there's going to be more regulatory clarity on, what is a security, finally maybe having stablecoin legislation in the United States that will really help innovators, confidently engage and build, whether that be an individual developer or, a big multinational enterprise. And I think, what also has been, because what's kind of special about this conference and this time here in Davos is it's really a huge group of global stakeholders. And I think folks were waiting for the United States to take the lead. And I think there's a lot of, feeling and optimism that now that we have this incoming administration, that is a lot more supportive of crypto and kind of what it can do, that the US will finally be in that position to lead on all these fronts, and ultimately what that can do for the US dollar, and those use cases we're talking about for bridge currencies and USD backed stablecoins. So I think, I don't know, but if I had to say, I think my hope is the first thing that we're going to see is stablecoin legislation in the United States, because I think that was something, that was kind of recurrent in the conversation here about just how valuable that's going to be for the United States.
And what challenges do you see for institutional adoption of tokenized assets, and how is Stellar addressing them?
I think it really has been the past 4 years, and in the administration, some of the engagements with the SEC, I think, have been complicated. It's been hard to know really where financial institutions can play when you're talking about tokenization. And I think now that this potentially is going to change, and the SEC leadership is going to change, and we're going to see, sort of just a different tone. I think that's a signal that financial institutions can engage. I think what we at the Stellar Development Foundation have always tried to do, and will continue to do, is just to be, a partner in education for regulators and policymakers to make sure they understand what the tech is capable of. And really kind of maybe dismiss some of those concerns or hesitations that might, be the blockers to being able to adopt it, and getting the kinds of legislation and regulations we need in place to really grow and make our financial system more effective and efficient.
Great to get that insight from Davos at the World Economic Forum, of course, with Stellar Foundation and my colleague Trinity Chavez. Well, stay with us, because up next, we will count you down to the market open behind me and share more about today's bell ringer, as its stock is set to open in an IPO today. How has this partnership propelled Snowflake's growth and deepened its ties to the broader financial and technology communities?
Well, you know this. The New York Stock Exchange is the most storied stock exchange ever on the planet, and we're thrilled and honored to be on it. But there's also a very deep collaboration between the firms. It's at the level of us being the data platform for ICE and for the New York Stock Exchange, and being an important distribution mechanism for all of the amazing data that the NYSE wants to share with its customers and partners. We get a lot of great feedback about where Snowflake should evolve from Lynn and her team. And things like the tree lighting and the judging are the icing on the cake that demonstrate how closely the companies work with each other to partner, but just as importantly, create success for all of our giant customers. It's a deep partnership that I'm very, very grateful for. I tell people that AI is already magical because these language models can do things like understand fluid language, like the language you and I are speaking, and make sense of it, extract context from it, and do that effortlessly. We knew that how people are going to consume information was going to be changed forever. Just like, back when the first smartphones came, most people in the world kind of simultaneously realized that there was a before and an after, that everybody was going to have these amazing devices with them. I think we're going to think about AI the same.
All right, we are moments away from the opening bell here at the New York Stock Exchange, and a big day to close out what's been a very positive week. The S&P 500 ending yesterday at a record high, set for a second straight week of gains, and the biggest energy company set to IPO in over a decade, Venture Global, on the podium there as we await the opening bell, and that stock is set to open for trade in its IPO today. Let's take a listen. the cheers for this company again. The biggest IPO that we've seen in the energy sector in more than a decade. Venture Global, a liquid natural gas producer operating out of Louisiana, set to debut today at the New York Stock Exchange. Well, it comes as the S&P 500 is right near a record high. And so joining me now to talk more about the markets and the recent momentum that we've seen is Walker Williams, Chief Market Strategist for Private Wealth at Lido Advisors. Walker, welcome to the show. And what do you make of this market momentum?
Good morning. Obviously, the market continues to build this positive momentum in various sectors. We're seeing it. Tech continues to run. Obviously this morning you had Venture Global join the exchange. There's momentum in energy. There's sustainability in different things. However, I'm going to be honest. The market's expensive today. When you're looking at long-term price-to-earnings ratios over the past 25 years, has been about 16.8. Today, PEs are in the high 20s. So that does give a moment of pause, even though momentum continues.
It's pretty impressive, I must note, as you make note of valuations. We haven't seen a correction, which many would deem healthy, at least one correction a year, a pullback of 10%, really a consolidation after strong gains. The S&P's up on average 7% a year over time, and we haven't seen a correction in a long time. What does that say about some of the sentiment that has been driving this market higher?
If you look at we do have survey data coming out today about various sentiment levels. There's really been a disconnect between what, the surveys had said and what the market is doing. We believe, honestly, near-term volatility will persist here. Obviously we have a new president, different sort of conjectures with economic policies. And, from that standpoint, as you know, corrections do and will happen. If you go back to last August, there was, a slight correction with the yen carry trade reversal. We had a little bit of a correction here in December as the market adjusted to the lack of rate cuts going forward. It's difficult to forecast what would cause it. Obviously the fundamentals today, when you look at valuations and U.S. Treasury yields being around 4.65%, typically that's a headwind and valuations have to adjust. We just haven't seen it.
We are going to hear from the Federal Reserve at its first policy decision of 2025 next week on Wednesday, including comments from the Fed Chair Jerome Powell. That comes after President Trump noted yesterday in a virtual address to the World Economic Forum that he does want to see lower energy prices and lower interest rates. How does the market absorb that?
I think this is the giant question of the dance we're doing. Can you have a pro-growth government policy and fiscal policies while maintaining inflation? That's really where the Federal Reserve, what we're looking for their commentary on is we've had a persistent jobs number. We've had persistent GDP growth, although it's tailoring down. But all those things we talk about, the reduction of energy prices does affect inflation if it can happen. However, you also have the other events out there that we're talking about. Tariffs, that's an inflationary cost. Cost of financing. Like this month alone, we've seen a plethora of new issuance in the corporate debt markets because spreads are so low. Does that mean companies are trying to get ahead of what they think is longer rates for a period of time and spreads increasing? That's a giant, question for us. With those policies tend to lead to inflation, but rates are high. How do we sort of get into a good equilibrium?
And so what you've been seeing so far, Walker, in terms of earnings, many companies exceeding expectations, that fundamental seems to be in place. Certainly economic growth seems to be in place as well. The latest inflation read that we got just about right? In line with expectations, not too hot. It does seem as if the fundamentals that the market historically moves on really are in place. What's your view?
Yeah, the fundamentals are rather resilient. I think if you go back to the fall and the summer, with the interest rate hiking cycle the Fed was doing, we'd expect some of those numbers to, not be as strong as they are today. One thing to watch from us is, obviously the labor market. There's concerns about sustainability still. what does that look like? We've seen revisions across the street in GDP forecasts, just as this economic recovery gets a little bit longer in the tooth. Now, on the other side of this, let's talk about the elephant in the room, AI, and what that means. The AI transition we're seeing for companies and in their earnings, that's definitely a CapEx add to the economy and economic activity. So we're watching this from this standpoint. We're still forecasting economic growth to be positive in 2025, but not at 2024 rates.
Walker Williams, thank you so much for joining, of course, as we round out the week. Walker's a chief market strategist for private wealth at Lido Advisors. All right, well, stay with us because up next, we're going to dive deeper into AI and technology, as Walker was just discussing about, and this time in a roundtable format. We'll have more on the other side of the break, including joining by my colleague Trinity Chavez up next.
Orbit is a space logistic company. Actually, we have been the first space logistic company in the world, pioneer. What does it mean? Space logistics for us means taking care of customer assets in space, so satellites.
But what you're describing, it can't be easy. So talk to me more about how you go about optimizing in-orbit services while also reducing costs for your clients.
You can consider the launch vehicle, the rocket, as a bus, leaving each passenger at the terminus. Our satellite, our orbital transfer vehicle, that's the technical name, is released at the terminus together with other passenger. But our satellite has on board third-party passengers, small satellites on behalf of other companies. And if the rocket is a bus, we are Uber, taking each passenger to their respective home, which is the target orbit. They could do that on their own, which with traditional methods takes 6 to 10 months, thus wasting 1/3 on 1/4 of their operational life. We can do that in much lower time. So the result for the end user is getting to revenues earlier and extending the operational life of their asset.
There has been increasing demand when it comes to the utilization of space-based technologies. Talk to me about how D-Orbit is positioning itself from a business standpoint to keep up with the growing demand.
Besides the traditional standard services, we now see a big demand for something new, which is cloud computing in orbit. The quick, immediate need of
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio at the Stock Exchange. And now that the market is open, I do want to bring in my colleague, Trinity Chavez. She has been working with the bell ringers on this big IPO day up until this point. Trinity, it's good to see you.
Hey, Kristen, good morning. It's an exciting day here at the Exchange. One of the largest IPOs of the year. What a great way to kick off 2025, what it means for the broader energy sector and the NYSE community. It's just a great day here. But I do want to switch gears a little bit to the tech industry. As this industry is navigating through uncertain market conditions, shifting public policies, and a new administration, it's also important that we take a look at how transformations are impacting the broader industry and our economy. To break it all down, I sat down with the co-founders of SiliconANGLE's theCUBE, Dave Vellante and John Furrier. Let's take a look. So I do want to start off the conversation by talking about the tech demand, right? We are seeing different headwinds that are impacting the current landscape. Talk to me about what the biggest key headlines are.
Well, I mean, headwinds are all relative, right? We came out of COVID and we were spending 7-8% a year. Now it's down in the 3 to 5% range. And because people are shifting budgets from traditional spend into Gen AI. And so that's stealing and creating a headwind. That's number one. Number two is people aren't getting the ROI they need. They're hitting, small wins. And so that means people are a little bit cautious right now.
And John, how would you describe the current economic environment we're seeing in the tech sector?
The demand for AI is off the charts. Demand growth is growing faster than budget. So there's a huge pressure on companies to build and grow with AI. I think the biggest headwind is a combination of supply of equipment, AI infrastructure, and geopolitical forces as tech becomes a political element of our conversation. You're seeing a lot more conversations around the role of tech and specifically AI outside the United States, and geopolitical certainly as the new election puts into place with Trump taking over. China, the role of the chips, all that is in play, and that may impact the supply chain.
Talk to me about your predictions for 2025, specifically when it comes to semiconductors, infrastructure, and software industries.
Well, there's a big shift in public policy right now. Tech bros are lining up, behind the administration. Apple, Zuck is funding the inauguration, as we saw, et cetera. Jeff Bezos. And so I think that's smart with the tech industry to, why not lobby the administration? And you also see Gary Gensler is out. So that could be a good tailwind for crypto. Lena Khan is out, so that might mean good things for M&A. We'll see. We'll see if the new administration is, more favorable. I think it will be. I think there's no question. It couldn't be more friction. And so I think you're going to see some positive tailwinds.
John, do you think that we're going to see different trends as, Trump fully takes office and the new administration goes full force?
Yeah, I think we're living in a global economy, and I think The World is Flat was a famous book that talked about that, and I think that's going to have an impact to how the United States postures its competitive advantage. AI will be a major force. Some call AI the Manhattan Project of our generation. Others look at crypto, with Trump looking at crypto and Bitcoin specifically and buying a big reserve up. You got the Middle East, you got China. Again, everything's now on the table. When you look at sovereignty in the U.S., you'll see the U.S. probably take a position to either be more protection oriented around the technologies and look for a competitive advantage for productivity. And of course, this is all going to impact supply chain as well, because the semiconductor ban that Biden put in place might have an impact to how we treat caps on exports and things of that nature. So this is all kind of at the nexus of competitive advantage as a country, but also the companies here in the exchange and the stock and prices and their revenue may be impacted by the demand and the supply chain specifically.
Now, given economic uncertainty, how are you seeing customers shift their priorities, and how are companies responding?
Well, the market's really bifurcated right now. I mean, all the action is the hyperscalers will probably spend the big three hyperscalers, about $200 billion this year. And ironically, NVIDIA will do about $200 billion this year. It's not a one-to-one, but they're picking up a lot of that data center business. And so I think customers, they see the headlines, but for the enterprises, they're still trying to figure out, okay, how do I take the experiments that I've run for the last year and a half in the cloud, bring that maybe into my own data centers or move more data into the cloud? And they're trying to figure out where the big value is. So they're looking at doing more with less people, or even cutting headcount, or driving revenue. And that latter one is a little elusive right now. I think the headcount is much more straightforward.
John, talk to me about the current cloud and hyperscale market. Where is it now? Where is it going to go?
The hyperscale market's kind of historic in the sense of we're now on Gen 2 of the cloud, AWS, Google Cloud, Microsoft, Oracle, and others. And you're seeing kind of a next level kind of economic boon. And for example, the enterprise is the top focus of all these top clouds, because that's where the AI has the most upside potential. And you're seeing people look at their return on investments as a more practical approach. People aren't looking for the home run ball, so to speak. They're looking to hit some singles, get on base, get some wins. It's not a winner take all market, it's a winner take most. You see NVIDIA doing well, AMD should come in on the semis, but AI infrastructure is the top focus. And once that's kind of settled, this data layer is going to kick in, the agents are going to come in, the agentic systems, we call it. That's going to fuel the software development frenzy that's happening right now as developers in the ecosystem are constantly using low-code, no-code agents to write code. So you're going to see a lot more pressure on the hyperscalers to serve these developers that are going to bring in new brands, new companies will form, and you're going to see a lot of wealth creation, Trinity, around AI, and that's going to be a huge renaissance of the computer industry.
Well, gentlemen, it's always a pleasure speaking to you both. Thank you for joining
Thanks,
me on
Trinity.
Piggy Shop.
Great to see you.
Great to see you.
Now you can tune in to more dynamic discussions around the intersections of technology and public policy at siliconangle.com, or check out their YouTube for episodes every Friday. Now we're going to take a quick break, but when we come back, I'll be speaking with one of the founders of Karate Combat.
So you work with many organizations undergoing digital transformation. What role does observability play, and where does Dynatrace fit in?
when you're going through a digital transformation, most likely you're going to change a lot of your digital estates. You're building new applications, you're connecting maybe a new mobile app or a new service to your backend systems connected to AI systems. So the first thing you need to do where observability helps you is really understand your entire IT estate. What are you running? Which components or which applications are talking to others? What's working, what's not working? Because you're obviously going through this change, you're going to iterate over this environment and keep evolving it. That's one role that observability is playing. And once those services are then live and users are using it, observability helps you to optimize the user experience. I think just 2 days ago, when it was the British Airways outage, how do you feel at an airport if the service is not great? So observability does both. It actually helps you to understand how your system is working and how the individual pieces play together. And it also helps you to understand how users feel about your service, whether it's working for them. And then finally, if something goes wrong, and every now and then obviously something does actually go wrong, it helps you to find the issue quite quickly and helps you to also to resolve the root cause, or what the actual problem might be. Because as you can imagine in complex landscapes, there's thousands, even millions of components, and observability and Dynatrace also helps you to pinpoint exactly where the problem is.
Now, Dynatrace has been working with AI for more than a decade. As the discussion regarding the cost of generative AI investments and ROI heats up, tell me, how is Dynatrace helping organizations to get the most value out of AI?
So we have a dedicated solution that we call AI observability. So we just talked about observability, now we're extending it just to the realm of AI, so helping understand how much.
From crypto to combat sports, Solo Cisse is leading innovation as co-founder of Galaxy. To dive into Galaxy's mission, the evolving crypto landscape under the new Trump administration, and the future of Web3, well, he's joining me now to talk more about it. Solo, it's great to have you here in studio.
Thanks for having me.
Absolutely. You know, I do want to talk to you about Galaxy. For those who might not know exactly what this is, give our viewers a little bit of information.
Absolutely. So we're a platform for creators, allowing creators to launch their own private communities or public communities with the power of our social wallet. And so with Galaxy, what makes it unique is creators are able to create their own online social clubs, we call them, or worlds, where people are able to create their own white label apps and invite their communities, whether those are subscription gated communities, whether they're open to the public or private, so that they can determine who gets in. It's really about fostering this new world of complete ownership of the social spaces we're in.
There have been several announcements actually that have been made recently, especially with the new administration. It's day 5 that President Trump now has been in office, including an executive order that's involving the crypto space. Talk to me more about this and how you see this impacting the broader industry.
Absolutely. I mean, I think this weekend was crazy. We saw the launch of the Trump meme coin, as well as he's been working on his Project Liberty with his sons and crew and the team there. And so I think what we're entering is really a renaissance for the digital assets and artificial intelligence age. Yesterday at Davos, President Trump did mention that he wants America to be the capital of crypto and AI innovation. And I think that's a huge sentiment shift that we are seeing compared to, past years with the previous administration and the, regulatory regimes that had been in there. We're really entering the golden age, as a lot of people call it, where we're expecting to see not just, more tokens, but really incubated businesses, much like Karate Combat and Galaxy.
Yeah, Karate Combat has really made an impact in the broader crypto ecosystem, especially when it comes to conferences. Can you talk to us more about your involvement and your work with Karate Combat?
Yeah, absolutely. I've been, had the pleasure to be an advisor to the Karate Combat team, and they've done, a transformational effort with what the power of community and what sports could really look like through the use of blockchain technologies. They're really enhancing and providing a product in the realm of sports. And when you think about sports betting and you think about risk and just what gets people excited, you really see, such synergy between these technologies. And so, them by turning themselves into essentially a DAO and giving power into the hands of the fans, you're really proving out the core ethos of decentralized technologies in terms of the product, and who doesn't love sports?
Of course. And talk to me more about where you see the broader cryptocurrency industry evolving in the near term, especially under this new administration?
It's I think there's going to be, like I said, a renaissance where you're going to start to see use cases start to incubate, right? The U.S. Is a different market, and now we're starting to see that sentiment shift. But much around the world, lots of countries have embraced this. You've seen the president of El Salvador talking about buying Bitcoin along the lights of Michael Saylor. But I think what we're going to see is that catch-up period of rapid innovation, where you're starting to see a lot of founders and a lot of teams come back to the United States looking to build businesses here. And I think that's what the president and the incoming administration really wants, is they want to see and support that innovation being done domestically versus being pushed elsewhere due to unclear regulations or a lack of understanding from regulatory powers.
From your vantage point, what do you think the top priority should be for 2025?
Top priority should be adoption and education. I'd say education is really key, just because I think with such a quick sentiment shift, there's going to be a lot of people caught off guard. I think the previous 4 years, and I think a lot of what transpired in the last 4 years really did impact how the average person sees crypto. But I think we need to do a big job, in things like Senator Loomis and the strategic stockpile are going to really be helpful in educating why is the government deciding to allocate resources to this industry, why are they looking to buy and acquire these assets, and what does that really mean for you in your life, and really just pushing down that core ethos of the mission of Bitcoin, which is really a mission of hope. During a time today when inflation is really high and the cost of living is becoming too hard to deal with.
We have about 60 seconds left, but I'm interested to hear your take when it comes to jurisdictions. Where does the U.S. fall compared to other areas in the world?
I'd say that we've got some catching up to do. There's some areas in the world, especially in Europe, places like Switzerland and other places that have been more accommodating and more welcoming of the new broader order. But I think that could be explained by a number of things. You think about the U.S. dollar and what its role is in our global economy, and I think with any sort of transitional period, there's that opportunity for there to be that little bit of friction. But I think we're now aligned. I think the incoming administration, the direction of this company, understands what Bitcoin could mean for this world and a better society. And I think we're all excited about to see what that does in terms of enhancing the human experience.
I think everybody is going to have a close eye on all things crypto, AI, and technology as we see this administration take shape. Again, thank you so much, Solo Ceesay, co-founder of Galaxy.
Thank you.
Now, we do have a lot more to get to, but I want to send things back over to my colleague, Kristen Scholler, with more on the wildfires happening across the country.
Trinity, thank you so much. Of course, our hearts continue to go out to those impacted on the West Coast. As California remains on wildfire alert, we've been hearing from NYSE-listed companies that are stepping up to help those in need. And among the companies with action underway is Home Depot. In fact, its foundation recently upped its commitment by $2 million to support immediate disaster recovery and long-term recovery needs for Southern California communities. It brings the foundation's investment now to $3 million in total as of early Friday. So let's take a look at a few of the images showing Home Depot in action. Its foundation has met with on-the-ground nonprofit partners to gauge what resources will be necessary to rebuild. With $3 million committed so far, $2 million will go to disaster response nonprofit partners like Team Rubicon, World Central Kitchen, and Convoy of Hope. Its initial $1 million pledge is for Path to Pro efforts, aiming to help fill the labor gap as communities rebuild. Well, the executive director of Home Depot had this to say amid its latest announcement, quote, rebuilding will require skilled workers in construction, an industry that is already understaffed. That's again according to the executive director of the Home Depot Foundation. She goes on to say, with tens of thousands of structures and many of the Home Depot's associates and customers impacted by the fires, it is important that we address the immediate needs of communities while also ensuring that they are equipped to rebuild, end quote. Anheuser-Busch, the maker of Budweiser and Bud Light, is also responding in kind. So far, it's delivered more than 164,000 9,000 cans of safe drinking water alongside the Red Cross to communities that have been impacted. Its most recent disbursement came on Tuesday when it delivered more than 9,000 cans of emergency drinking water to first responders of Los Angeles Fire Department 66 and the Oregon and Utah firefighters base camp in the Palisades. Anheuser-Busch first started delivering clean drinking water 2 weeks ago on Friday, January 10th. Of course, our hearts do go out to all of those affected by the wildfires. It's the time to lean on community, and we will continue to do so in our coverage, bringing you the supportive stories we're sharing. All right, well, before we have to let our viewers go this morning, we do want to talk about Venture Global, the biggest IPO that we are about to see in the energy space in more than a decade. A company that is a liquid natural gas producer operating out of Louisiana. Trinity, I know that you were following this big deal earlier this morning too.
Absolutely, Kristen. As you said, this is one of the largest IPOs that we've seen so far this year. This company joined the long list of over 2,400 listed companies. Right now, all the action is taking place on the trading floor as the designated market maker is getting ready to ring that first trade bell a little bit later as the price discovery process is underway. Again, I want to go back to the IPO size. This is a company that's $1.75 billion with a potential valuation of over $60 billion. And so this is a huge impact on the broader energy sector and what it means here for us at the NYSE. Again, I spoke with Tara Jejic earlier, just talking about that IPO process that we're going to be following on the trading floor with our DMM. And, you know, it's just such an exciting time whenever we can have IPOs like this at the New York Stock Exchange. But again, this is just the very beginning, a great start to 2025 as we gear up for more of those IPOs.
Trinity, we certainly have seen the deal window open a bit in 2025 amid a wave of momentum that we've been covering here on the show from the stock exchange. Of course, optimism around a new administration, still very strong fundamentals intact like earnings growth and economic growth, which historically have taken the stock market higher over time. This deal today, Venture Global, of course, follows a major IPO from another energy company last week called Flowco. That deal priced above the range, popped double digits in its first day of trade. So I'm sure we'll have more to cover in the days and weeks ahead. It's going to do it for today's show, everyone. Thank you, as always, for watching. From the NYSE TV team, we'll see you on Monday.
Thank you for being innovators in the market. Thank you for all you do every day to show the world what best in class truly means.
We are incredibly proud to join the ranks of other highly successful companies who partnered with this legendary institution.
What a time to be here. I am so proud of what we're doing.
This is a huge milestone for our business. There's a lot of people responsible for getting to where we are today.
We have a role to play in bridging the gaps that exist today between us.
Not many people get to do something big in this world, and we get to do something truly special.
This is such a wonderful place to both look back and look forward. I'm so optimistic about what lies ahead. It has been a privilege to be with you.